please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. The last few months have seen quite a bit of churn in the mutual fund world, all thanks to a new set of rules which govern the mandate and the market cap classification of funds. Now, several schemes have actually undergone name changes. There have also been a few instances of mergers. Some funds have actually seen a clear change in their mandate, the very fundamental reason behind what they do, whatever they do. So to help us analyze all this and take stock of this ever-changing environment, this week on the show I have with me Kaustabh Belapurkar of Morningstar India. Kaustabh, thanks so much for joining in. It has been a confusing 3-4 months for investors, I think, out there, and even people who track mutual funds.
Yes. Because
there's so much of churn thanks to the rules which were released back in October 2017. AMCs have had the time to go back and forth, decide what they want to do. Your first thoughts, has it been disruptive, or are there, in your analysis now, only maybe 1 or 2 schemes where there is a big change?
Sure. So, I think it's important to sort of lay down the perspective from where the regulator was coming, right? So, the Indian mutual fund industry is kind of that cusp of breakout growth. We've seen great, new investors coming in, a lot of assets coming in. So, it was a point that, it was, I think, a necessary move that they had to take. Because and new investors coming in, there's no clarity about what each fund mandate was in the past. So I think just to clear out the air around that, the regulator take the step. Yes, it's probably disruptive in the short term, but probably, I think, a good move in the long term, looking at the trajectory we're looking at assets growing, right? So that's great. And I think the dust should settle in the next few months, where we've seen most of the funds already declaring what their mandates are. Which category they're going to be in. The name changes, that's a little bit of a sticky thing, because these were brands that you associated with, and now you have to get used to the new normal. So it'll take some time, but I think by the end of this year, everyone should be up to speed. I mean, we're also grappling with that right now. We'll just have to be a little patient. And I would urge investors that reach out to your advisors, let them handhold you during this period. It's important because there have been some changes, there have been some mergers, so it's important to understand from your portfolio perspective what's really happening.
Oh, absolutely. So what we'll do over the next 20 odd minutes is take you through some of the more important changes that have happened, some of the big schemes, marquee schemes, where either there is a name change or maybe there's a change in mandate, and that's where you need to take stock and really figure out if the fund's mandate now is in sync with your own goals, your own reason for being invested in that fund. So as we start this exercise, Kaustabh, first of all, have there been too many significant changes, or is it largely nomenclature? So then that's a cosmetic change, right? If the name is changing, if let's say a word is being taken away or a word is being added.
Sure. So I would say there have been a few changes, but not as dramatic as people on the street expected them to be.
Okay.
Because the one thing that the new categories have introduced, they've streamlined what each fund can do in most of the categories, but there's some new categories that have been created. So there's space for fund houses to kind of move some of the existing funds into a newer category. And what we've seen that there's been a reasonable amount of similarity in how a fund was run in the past and how it's going to be run in the future, even though technically the category is being changed. So when I say that, to just give you an example, say if we had a large cap fund, which is now going to be run as a multi-cap fund, multi-cap/multi-cap fund earlier. Again, it's not going to change it in its mandate, it's just falling into a newer category. Because they already have another fund that's going to be in the multi-cap side. So it falls into the larger mid-cap, but it's going to be a flexi style, which is always how it's been managed in the past. And that's the point I was making, that here's a flexi sort of style, a true flexi style fund, whereas the Mirai fund is going to have a more mid-cap bias.
Okay. Moving to the multi-cap category. So the multi-cap category, obviously, I don't think there are any definitions. I mean, a fund manager can go across market capitalizations. It can have as much of a skew towards any type of stocks, right?
That's right. So it's purely going to be on the basis of where the manager's comfort lies. And where he sees probably better stocks or better valuations, he can move across that. But again, there also you will have certain managers who would be more focused towards a particular capitalization or segment because they've been running that portfolio like that in the past. They don't want to shock their existing investors. They might make marginal changes. One of the examples, for instance, is the Mirai Asset India Equity Fund, which was the Mira India Opportunities Fund earlier. That has always had a large cap bias. It's going to continue, though it falls into the multi-cap category.
Okay.
Another name that comes to mind is the Franklin India, which is the Franklin India Prima Plus, which is now the Franklin India Equity. Again, Anand runs that with largely large cap bias, and it's going to continue.
Okay.
As opposed to some of the other funds that would fall in this category, say for instance the DSP India Equity Fund, which is going to be a more pure play multi-cap where the manager will look at opportunities across capitalizations and move across. So I think that's again just reiterating that again that investors need to, in some of these slightly more open-ended categories, just try to understand what each manager is doing in terms of his style or the capitalization bias.
Okay. Earlier, we were also talking about the SBI fund.
Right.
Missed that one out. So the SBI Global. Now that's a global fund that we're talking about. What are the changes in this one?
So the SBI Global, as it was called earlier, was essentially looking at quality mid-cap names, and that's really the way the fund was being run for many years now.
Okay.
Now it's going to be more an MNC focused fund.
Okay.
So that's a little bit of a more focused strategy that's coming.
Okay.
While elements obviously were already being invested into, but now it's purely sort of an MNC fund. So that's one change.
The name remames the same, SBI Global?
I think it's changed now to actually I don't remember clearly, but I'm sure we can look that up online.
Sure.
But the mandate has kind of been more streamlined.
Okay.
So that's something which investors should
then
consider.
it will fall in the thematic category, this fund now.
That's right.
Okay, so in case you had any investments in SBI Global, just go and check because there could be a far more concentrated investment approach with respect to this fund. So, let me get down to basics then, because obviously it is a very case-to-case situation that you need to be aware of. What is the advice to investors right now? First of all, where do you start? I mean, ideally you should have got the communication that came in from the AMC, but how do you, if you're taking stock of your portfolio today, how do you figure out, first of all, what is the category in which the fund is today falling? And then, how do you build from that?
Sure. So I would say the first thing to do is don't try to do it yourself. Reach out to an advisor. If you don't have one, find a good one from your friends' network. And they're the ones who are really going to help you through this, because it is quite confusing. I mean, there's so many name changes, mandate changes. And like I said, sometimes on the surface, it looks like a mandate change, which may not necessarily be. That's the first thing you need to do. The next thing is don't do anything in a hurry and a panic. And I'll tell you why. Because while investors may think that I have an exit-free load window, which is now in most cases over, but you need to think about taxation too, right? If you haven't completed 1 year in your equity investments, you're going to get hit with a 15% short-term capital gains tax. So that's the other consideration you need to have in mind.
Yeah.
And I think the most important thing is, so you need to look at each portfolio individually and also constructively as your entire portfolio.
Sure.
So while funds, like I was saying, some might have dramatically changed, some probably at the margin. But when you look at it from the overall portfolio construct, as long as the funds still meet your risk return objectives, you should be fine. But if there's a dramatic mandate change which has happened in a few funds, then you might want to relook at it from from your overall portfolio perspective.
Welcome back. You're watching Money, 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 and we have been analyzing all these changes that we've seen over the last couple of weeks with respect to mutual fund schemes, now that there is a new regulatory framework that is here with us. So, we have a little bit of time left on the show. Why don't you give us maybe just 1 or 2 examples, or even if it's the top fund from every category and what seems to be working for it. So let's start with the top ranking large cap fund on Morningstar.
Sure. So I think one of the funds that comes to mind is the HDFC Top 100, which was originally called the HDFC Top 200 fund now. Nothing's really changed despite the name change. He's always, if you look at his portfolio, Prashant, who's been running the fund for many, many years now, has always had that focus towards the top 100 stocks.
Yeah.
So nothing's really changed from that perspective. Now, Prashant's been sort of an early mover and he did get some pain, for instance, when he was in some counters like SBI in 2014 and 15, but I think he was just a little early cycle at that point. But just the depth of the team and the research and the experience that Prashant himself brings to the table, he might be early stage, but I think he's done a wonderful job of shepherding this fund, and we really think that whole process works very well for him.
Okay, so that's that's the top ranking. Since we're a little short on time, we're just taking the top ranking fund per category. I'll move to the mid cap category, and here it's the HDFC stable, HDFC Mid Cap Opportunities Fund, one of the biggest funds again of the country.
Yes, so that's another great fund that's there, which Chirag manages, and it's become fairly large in size, but he's done a great job again in terms of managing or getting the new ideas. There's another name I think I would want to acknowledge here before the Franklin India Premier Fund. I think Janki Raman, who runs this fund, is kind of the specialist of small and mid-cap stocks within the stable. And again, great quality bias. So, they clearly looking, while in the mid-cap space, large focus on quality of management, quality of growth. I think these are parameters that when they look at investing become paramount, and that really helps a fund like this because, we know management, if dodgy, can really
Oh yes, mid-caps quality is key, absolutely. Which brings me to the small-cap universe. Here again, you like, also from the Franklin stable, their India smaller companies fund, I guess for the same reasons. The DSP BlackRock small cap also features on your list.
Yes. So again, I think a great fund. Unfortunately, I must say that right now it's shut for fresh subscriptions. So and they've also been going through their own bit of churn in terms of Anup moving on and BlackRock moving out. But I think Vineet, who's been running this fund for a while, is again the designated small and mid-cap specialist. And he's been doing a great job in identifying those new ideas, new stocks, really early mover into some of these ideas. So great fund. Hopefully it opens again when there's capacity, but that's a fund that we love.
Okay, well, those are some interesting ideas that perhaps people can keep in mind. We're definitely going to invite you back and have a more detailed discussion on all the key funds that Morningstar India likes at the moment. Thanks very much, Kaustabh, for being with us. Well, we hope that was useful for you. Your feedback, comments, queries, welcome as always. We'll see you again next week.